Day 2 promises to be equally exciting and more. Without wasting any more time, I take immense pleasure in inviting our first keynote speaker of the day, Shri Suresh Kozhikote, Managing Director and CEO, SBI Cap Ventures. A very warm welcome, sir. I'll take 2 minutes to introduce you. Mr. Kozhikote is a banker with 34 years experience in diverse areas, including private equity, alternate investments, treasury, retail banking, and indirect taxes. He started as a probationary officer in a state bank group. He worked through various facets of retail and operation banking for 12 years, including opening branches. He was on the boards of SBI Macquarie and Oman India Joint Investment Fund trustee boards, represented SBI in investment committees of AIFs, including SBI Macquarie, OIJIF, NEEF Fund, InvestCorp, Motilal Oswal, and ICICI Ventures. He took over as MD and CEO of SBI Cap Ventures Limited in June 2020. Needless to say, SBI Cap Ventures is a wholly owned subsidiary of SBI Capital Markets Limited. A very, very warm welcome to you, sir. Over to you.
Thank you, Neha. Thanks for a very warm welcome. It is my privilege to represent SBI Cap Ventures at this India Climate Investment Conclave. At the outset, congratulations to the Impact Investors Council for leading the industry dialogue on access to private capital for all the key sectors, including financial inclusion, clean energy, education, and healthcare. The compelling research and policy advocacy through representations to Government of India have really enabled the creation of an impact investing ecosystem. So congratulations to all to you. Coming to our topic, discourse on climate change and its impact in our life has become a kind of topic of daily discussion, unlike what it was a few years earlier, a discipline meant for climate scientists. Yes, the data what we are coming across really is a cause of concern. The 6th assessment report of the Intergovernmental Panel on Climate Change estimates that the world will probably reach or may exceed 1.5 degrees Celsius, that is 2.7 degree Fahrenheit warming, within the next couple of decades. It also highlights the current state of climate globally. Atmospheric concentrations of a range of greenhouse gases are increasing. The water cycle assessed to be intensifying. Frozen parts of the globe are melting and the oceans are warming up, to list a few indicators. While these findings are no doubt being giving sense of impending gloom, it is also heartening to note that they come at an important time in human history, a time when environmental consciousness is at an all-time high. As of today, 191 countries have ratified the Paris Climate Agreement, and more than 50% of the world GDP is generated by countries that have made net zero pledges. President Biden has announced that the US will target reducing emissions by 50% or more by 2030, as compared to 2005 levels, on the way to net zero emissions by 2050. The EU plans to be carbon neutral by 2050. China's president has committed his country to achieving carbon neutrality by 2060. These are all positive developments. However, according to the Global Landscape of Climate Finance 2015, more than 75% of this finance originating in developed nations, climate finance, was invested domestically. This needs to change, especially since going into Paris for COP21. Developing nations have been vocal about needing the significant support in terms of finance and technology to achieve climate targets. Globally, venture capital and private equity investments in climate innovations has been growing about 14% a year since 2016, with most of the funding growing into mobility, renewables, and waste. Investment totaled about $30 billion in 2019 and $37 billion in 2020. But this is not nearly enough. Separate analysis by BCG as well as the Global Financial Markets Association, GFMA, on global climate finance requirements estimate that the world is between $90 million and $210 million short of yearly investments. It's a large sum for the achievement of net zero. From this, as we shift from the global to local, the scene is equally concerning. India, as we all know, is the third largest emitter of greenhouse gases after China. Of course, to combat the climate change, the Government of India has committed almost 33% reduction in the emissions emissions intensity by 2030 as compared to 2005 in Paris Agreement. But it is estimated that we require almost US dollar 2.5 trillion at 2014-15 prices for meeting India's climate targets between 2015 and 2030. This implies almost 170 billion US dollars per year for climate action. Now, what are the actual numbers like? The average green finance flow was just US dollar 19 billion to be exact per annum from 2016 to 18. Therefore, India faces a significant shortfall in climate finance. The financing situation has been further aggravated by the current COVID-19 pandemic. We all know how it has impacted everything under the sky. Post the pandemic, companies are finding it difficult to access capital that helps them build back, greener. And this continued shortfall in capital will make it even harder to achieve the impact goals needed to mitigate and reverse the effects of climate change. However, initiatives and interventions which provide access to low-cost impact capital, matched with the entrepreneurial talent that India has to offer, has the potential to deliver meaningful impact in our fight against climate change. India has received financing for its climate initiatives from bilateral sources, multilateral development banks, and international climate funds. The Indian government has also formulated policies in the renewable industry, in agriculture, in waste and water management, and sectors, all other related sectors to address climate change. Still, as per the climate policy initiative, the power generation sector remains the primary recipient of the tracked green finance. If you look at between 2017 and 18, almost 80% of the annual flows. The industry's maturity enables deeper investment potential in subsectors, specifically solar PV and onshore wind power, which again constitute almost 80% of the total finance flowing into the power generation sector. So this sector is kind of cornering a large amount of the quantum. As innovations in tackling climate change and environment-friendly technologies emerge, there exists an opportunity for climate and environment-focused funds to bridge the shortfall in funding adjacent but equally meaningful areas in climate tech such as energy efficiency, ESCO businesses, sustainable mobility, waste and resource management, to name a few. In SVL, we believe public funds would be an imperative in achieving these targets. The barriers to private investment, which include uncertain returns, lack of demonstrable track record, a lengthy time frames to pay back, these are all too high for many investors, both general partners that run venture capital and limited partners, including many institutions and with fiduciary responsibilities to the investors that invest in these vehicles. It's for the GPs and LPs, this is a challenge. Governments and public institutions can play a role in bridging the gaps and overcome the ecosystem and investment cycle challenges. Many of the advanced technological R&D require government to support and promote basic research while helping build the infrastructure and defining standards needed to undergird a more resilient distributed industrial base. This includes work in technologies that harness nature's design principles and manufacturing capabilities to design and operate at the atomic level of organic and inorganic sector. SBI Cap Ventures, under the parentage of SBI, State Bank of India, playing this role in our own way. SBI, as you all know, has decades of deep engagement with SMEs of India. SVL has taken the initiative to provide much needed capital, support, and deep sectoral knowledge to enterprises in order to scale technological climate tech solutions. Our initiative is focused on making equity investments in climate-focused early and growth stage SME, small and medium enterprises that typically face the highest difficulty in accessing capital. Because we believe that SMEs are the most appropriate vehicle to channel this capital as they provide the maximum leverage for the climate action. All sectors, including waste management, water supply and sanitation, clean technology, energy efficiency, all contribute towards mitigating the impact of climate change and promote a clean environment, along with creating green jobs, poverty alleviation, livelihood, and social inclusion. So leveraging on the SBA credibility, we also look to becoming the gateway for channeling the global finance. The equity financing initiates a virtuous cycle of capital availability as companies lever up to grow and expand further. Once again, a cycle that SBA as a lender helps perpetuate. Typically, Indian SMEs can leverage their capital by around 2x to 3x to access the debt to fund subsequent growth. The investment by funds managed by SBI Cap Ventures, NEEV 1, NEEV 2, in such businesses are creating a catalyst effect for the companies. NEEV 1 has been investing in climate and environmental sustainability sectors, healthcare, education, and agriculture supply chain. The portfolio investments cover 9 out of 17 SDGs and impact 4 million individuals. Commitment towards climate change, providing almost 3 million people across access to clean energy, and 1.5 metric ton of CO2 emissions saved over the life of the fund. So in our experience, the transformative impact of green infrastructure, small green infrastructure focused fund has been phenomenal. Based on this success, NEEV fund and the laser sharp focus of creating impact, we have launched our second fund also, NEEV 2. So every entrepreneur, investment, fund manager with their commitment towards climate change are trying to solve as many problems, not only by being a capital provider, but also a catalyst of change in the investment philosophies across the globe. Thus, our ilk intends to address two key areas of vulnerability. One, improving the livelihoods and contributing to the sustainable development goals. Two, mitigating and adapting to climate change. This, I'm sure, will help India achieve its nationally determined contributions under the Paris Agreement. At this juncture, I would like to bring up the economic case for governments to use economic and financial levers to support the transition of our economies and ensure it's positive for growth, jobs, and competitiveness. As we will continue collaborating closely as government ministries ensure maximum ambition at COP26, supporting aims for global consensus, and the implementation of NDCs that represent our maximum possible ambition towards a low carbon and resilient future. Going back to the earlier observation of the public funds in our context, as well as from the SVL experience in working with the governments, I would like to take this opportunity in leaving some thoughts for all concerned to ponder. Firstly, it would be advisable if the governments, all governments, I am specifically talking about Indian government in this context because it's our environment, could adopt a mission-driven approach to climate investment. For this, we would like to suggest considering 4 requirements. The mission should be well-defined. Investments should be based on detailed definition of technological challenges, goals, deliverables, including processes for monitoring accountability. So it's a well-defined mission. Second, missions comprise a portfolio of R&D and innovation projects for each technology challenge. R&D, especially early stage, is highly uncertain and requires policymakers to accept failures and use them as learning experiences without punishing stakeholders for defeats derived from the good faith efforts. Missions result in investment. The third part is missions result in investment. Missions result in investment across sectors which involve different type of actors. The highest impact can be achieved only if funds focus on actors across an entire economy and ecosystem. So not just one sector or ventures limited to private or public realm. The fourth one is to integrate these missions into the policy making, because the priorities need to be translated into concrete policy instruments and actions carried out at all levels of the public institutions involved. So under a mission-driven approach, which is my primary proposal, governments can assess their domestic climate innovation needs. Governments can then select investment areas by analyzing the available opportunities based on their impact, financial as well as climate, policy or regulatory tailwinds, and market attractiveness, looking at technology maturity, funding gaps, general barriers, etc. So I believe that a mission-based approach will be good. Now the second part, every mission needs to be assessed for its effectiveness. Here again, I would like to suggest a few key success factors that governments can apply to monitor their progress. Probably 5 or 6. First is to set a clear climate impact investment focus that concentrates efforts on select investment areas for further developing internal capabilities and create multiplier effects in the portfolio. Number 2, carve out a complementary market role that focuses investments on the undeserved segments to mobilize private capital and avoid direct competition with the private investments. Number 3, coordinate these fund activities and public policy to provide the required demand-side stimulus, which can be a tailwind via policies and regulations like carbon credits, green procurement. Number 4, what I would like to suggest, Build an experienced team with a demonstrable track record in impact and commercial investing with in-depth climate tech expertise and a strong partner network to drive portfolio value creation, impact with highly visible communication and engagement efforts that create, convincing proof points. Last but not least, establish a strong and recognizable brand that signals commitment to climate innovation and to being an attractive co-investor for private sector funds. So we would suggest about 4 points on the mission and about 6 points to study the success of the mission. On SVL side, as talking from the SBI Cap Ventures side, we would be eager and we would be willing to lend our support and our shoulders to contribute in co-creating such models alongside the government. With these thoughts, let me conclude. We all know that the climate clock is not on our side. Not only does the planet continue to warm, but the technologies that could ultimately turn the tide requires years of R&D before they enter the mainstream. More money is a big part of the solution. It is, but the funds must be well targeted and effectively invested. I sincerely hope that this event will be able to contribute in chalking out effective strategies in this respect. Wishing everyone the best of success in making the change we need. Let there be greener and cooler days ahead. Thank you all.
Thank you very much, Mr. Kozhikote. We couldn't agree more. Indian entrepreneurs surely have the potential to create the much required greener impact in climate. Thank you very much for the insightful data. Your perspective on behalf of SBI Ventures is of utmost importance, and I'm certain many in our audience have a lot to take away today. On behalf of the entire ISC team, I thank you very much, sir.